all excited to know more about stock market. For today's video we were going to tackle about a book review about stock market. This book review is all about the Little Book of Common Sense Investing by John Bogle. These are the key takeaways from this book. Investing is all about common sense. Owning a diversified portfolio of stocks and holding it for the long term is a winner's game. Trying to beat the stock market is theoretically a zero-sum game. For every winner, there must be a loser, but after the substantial costs of investing are deducted, it becomes a loser's game. Never take past performance as a metric for future performance. There is a 99% chance you are doomed. If you have to choose a fund, choose the one with the lowest fund cost, expense ratio, exit load, sales load. Invest in an index fund. Buy and hold low-cost index funds. Low-cost index funds held over a long time are the best option when investing in the stock market. The average annual return on stocks of 9.6% has been created almost entirely by enterprise, with only 0.1% made by speculation. Rely on Occam's razor and keep it simple. Buy a portfolio that owns shares in every U.S. business and holds it forever. Where returns are concerned, time is your friend. But where costs are concerned, time is your enemy. Index funds don't trade from security to security, so they tend to avoid capital gains taxes. Stocks and stock funds suffer from reversion to the mean, RTM, the tendency of above-average performance giving way to an average or below-average performance in the long term. Use index funds for bonds and money markets too. Focusing on growth or value funds isn't worthwhile because all sectors revert to the mean. Stick with the total stock market. It outperforms almost everything. Second-guessing, day trading, money managers, and almost everything else perform worse. It's pretty simple. Please don't pay for intermediaries. Diversify for yourself, and have it rock out with compound interest. This book is essentially a dismantling of vast swaths of the financial industry, especially the mutual fund. Step by step, and through the relentless application of real-world performance numbers and statistics, Bogle shows investing for what it is, a zero-sum game where people who don't index take money from each other while also paying the entire industry that is in place to chase mythical outperformance via mutual funds. Big long sell on low expense ratio broad index funds. Logic makes sense, and I would take it seriously if I weren't already a convert. It's so interesting that so many investors do not. Things that cost investors in actively managed mutual funds: expense ratio, turnover, fees cut into profits and capped gains lead to premature taxation, higher taxes, something about consuming nearly all dividend gains. Transaction, load, redemption fees. Investor emotion. Buying funds when the market is up. Picking mutual fund winners, who inevitably regress to the mean and lose them money. Also note that a VG tenure as a fund manager is 9 years, and tons of funds close when they have a poor performance period, so the likelihood of finding an actual winner manager and if she's still leading it 30 years later is exceedingly slim. Plus, you'd have to wait about 25 years to know who that is, by which time you've already missed out. That's all. Thank you for watching. I hope you learned many new things about the stock market. Kindly subscribe to our channel and click the notification bell. Also, follow our Facebook page to learn more about the stock market.